GM, everyone, and welcome back to another round of Solana Weekly News. Now, unfortunately, our fearless leader Jack is out this week, so you're going to be stuck with me and Mr. Thomas Bahamas today. Thomas, how are you doing over there in the US of A?
GM, I am doing great. It's a good day today. How about yourself?
Yep, fantastic Friday. Sun is shining, crypto is moving up, and we're looking forward to a great weekend. Now, we have an incredible show for you today, everyone, because one of the most polarizing debates in Solana history is once again under the spotlight. Token inflation is once again all that anybody can ever really think about. And we have a few proposals, governance proposals, sitting there in the wings that are hopefully going to turn this around and hopefully make Sol a bit more of a value accrual asset. So, one of the biggest issues, obviously, for a long time has been that current inflation is far too high. At the moment, people believe that Solana is paying too much for its network security. We're issuing about 23 million SOL per year at around about $1.5 billion. And a lot of us are saying that that's just too much. Now, this week, Solana votes on two proposals to fix that. The first one, SIMD0550, is being rebranded to SGP002. That's going to double the disinflation rate and get us to terminal inflation faster. The second, SIMD0553 or SGP003, is actually going to introduce a resource-based fee burn to drive some value accrual still and help us basically take advantage of this wonderful and vibrant ecosystem that we've got for us. So to explain to you what all this means, we're bringing on the two very best people for the job. Cavey, engineer over at Temporal, is the one who wrote SIMD553, and Sabs from Harmonic is running product and engineering over there. These two gigabrains are going to put their heads together and they're going to tell us why this is going to be so great for Sol and what it means for everybody who holds Sol in their wallet. Fellas, welcome to Solana Weekly News. How you doing?
Hey, how's it going?
Good morning, guys. Welcome.
So, guys, best thing to do is probably to take it right from the top. Great to have you both on, but the people want to know, what is the high-level, very broad overview of SIMD 553? If this passes, and if 550 passes as well, what does this mean for Solana? Am I instantly going to be better off if I'm just a holder who, bought some Sol on Phantom one day and, waited for it to go up? What's the overall, very high-level impact of these two proposals going through?
Yeah, I mean, I think one of them has a much far-reaching impact than the other, right? So the SIMD 550 is very clear-cut. It's disinflation, just print less SOL. The resource fee has a bit more a nuance to it. It changes the incentive structure of all the stakeholders on Solana, changes some of the market structure. But the sort of takeaway here is we're trying to introduce a more significant source of burn that we have on the network, while also trying to sort of fix a lot of the incentives that we see sort of wrong with the network today.
Love it.
Right. So the big question there is, I guess, incentives. We are going to touch on it very quickly, but 553, this was drafted up by you. Was this something that you'd been burning away for a long time? Was this something that you actually just cooked up, over the course of one night after two coffees and a Red Bull?
It's something that we've sort of had, at Temporal for, over a year. We've sort of brought it up a few times in conversation, but I think this is sort of the right time to do it, right? The way I sort of see it is Solana has matured quite a bit over the course of sort of the last few years, right? So a couple of years ago, Solana struggled with availability. A year ago, it struggled with performance, and now we sort of have the privilege to start discussing economics.
And what are the immediate kind of high-level economics of that? Sabs, I'm going to throw this one to you. If we implement 553 tomorrow, based on current existing activity on Solana, whether that's trading meme coins, whether that's trying to push through prop meme updates for tokenized stocks, what kind of burn impact might we see within the first kind of week or month?
I'm going to have to defer to Cavey on the exact numbers here. He's been crunching the numbers and doing the math.
Yeah, it depends on the value, right? So the main thing I'll say is, we don't want to go to the terminal rate immediately, just because, the first incentive we're trying to install is essentially trying to incentivize app developers to make more efficient, smart contracts. So if we just go straight to the terminal rate, it's going to be pretty painful, right? So we just want to introduce it slowly, let the app developers have time to bring down the resources they use, and then eventually, ramp up the rate later if it makes sense to. Now, in terms of the numbers that we can expect to see at the terminal rate, with the current level of traffic, we should expect to, roughly 1/3 of the current sort of issuance, or the issuance to sort of be offset. It's hard to predict exactly how much people will optimize and how sort of behaviors will change. But that's sort of the numbers we sort of expect to see within sort of the best available estimate we can come up with.
I love it. So from that, we're talking about inflation. So we're talking about a little bit more fees when it comes to transactions. So where exactly are those coming from? If I'm a user of Solana, am I going to be able to see the actual difference in transaction costs, or what does that look like?
So this is exactly. So we've thought about exactly how to set this rate, and we've looked at many on-chain programs to see what the impact would be, specifically on market makers, on takers, and on users. And I think each of these are sort of impacted differently, right? So the way that the market structure has evolved on Solana is, the market makers have discovered Oracle updates, super jobs, those instructions use very little resources. And so the market makers will actually see a reduction in their costs, right? Swaps are a bit more expensive, right? And so the way I sort of see it is, to a retail user, the impact will not be large. The most computationally intensive transaction that you can construct on Solana will cost 5 cents at the current, at the current price of SOL. The median will be still well under a penny, right? So now in terms of if you look at where is all the swap volume coming from, right? This is sort of another thing that we want to do with this SIMD, which is, if you look at traditional finance, you see 89% of the volume is just bots, PvP. It's a similar thing on Solana today, right? And one of the biggest issues that we have is that there is a lot of toxic activity, right? Market makers, if we want to build sort of the most ideal exchange on the planet, right, what we would have is market makers having non-toxic flow straight from retail users, and we want to cut all the toxic flow out. This SIMD raises the fees on toxic takers, right, just as it does on the users, except much higher volume. And so it improves the market structure, right? Retail users pay still well under a penny. Toxic takers pay that, but at scale, and the market makers pay a lot less. So that's the impact we would like to have with this SIMD.
That's fantastic. It seems like a better market setup for everybody involved. Now, you said toxic takers there. Can you describe like what you would classify as a toxic taker?
Yeah, I mean, so the thing is you have, suppose the price of SOL is 72, something happens, the Strait of Hormuz is closed again or open again, who knows, right? Huge move, it moves, 20, 50 cents, $1 in a very short period of time. The market makers need to update their quotes. The toxic takers are there trying to pick them off, right? Okay. Ideally, we would sort of, remove this, right? So, but if you have, say, maker A update the price before maker B does, now there's an arbitrage opportunity, and the toxic taker takes advantage of the fact that maker B has not yet updated, right? So if we are able to increase costs on takers, they have to increase the minimum edge threshold before they fire, right? We will see less bot volume from them specifically, and I think this is a net positive. If we activate it and we see less bot volume, I do not think that is a bad thing, right? We are making the markets less toxic for the market makers.
Yeah, that does bring me to a certain point. Oh, sorry, go on, Sabs.
I was going to say, I think one more thing to throw in here, right, is remembering like Solana is in the business of basically selling compute to mutate a giant database. Right now, the incentives are not aligned for anybody to sort of respect the compute unit cost, like the cost of compute, right? And this is sort of the most fundamental change here. To just dig into more regarding toxic takers, building Harmonic, being in the business of block building, the majority of network activity that we deal with, all the spam we're filtering through, are just toxic crank searchers. They're just spamming the network relentlessly, trying to capture any opportunity, and 99% of the time, they're failing. This sort of realigns the incentive so that they are less incentivized to do that, because the cost of doing it would go up substantially, since swaps cost a lot more than Oracle updates for like prop AMMs or CLOBs or whatever it is, right? So it also shifts the narrative such that makers are at the advantage here, whereas toxic takers are not.
So would a kind of Eli 5 very simplistic way to think of it be we're trying to make it as expensive as possible for toxic takers, and by doing so we add a sol burn, and at the same time we're making it more efficient and cheaper for makers to give us more liquid markets, correct?
Yes, and it goes beyond that. Like if you think through the incentive structure of all the all the like stakeholders on Solana, right? Like you will see core devs admit, like if I improve the performance of the chain, there's less less money, right? Like fees go down. With this, like the core devs are incentivized to increase the resource consumption capacity of the network. The validators are incentivized to upgrade their hardware to be able to sell more resources and increase the buyback. The app builders are incentivized to reduce their computational and state footprint on the network. The toxic takers are disincentivized. The market maker costs go down significantly. The searchers switch from adapt from blind searching to more informed and targeted and like reactive searching on the network, right? And then the sole holders win, right? There's a new incentive for them to they're not guaranteed to be perpetually diluted, right? So
yeah,
sounds good. Oh, go ahead.
Sorry, Cavey, did you mention app builders right now and how they're sort of not optimizing for? Yeah, I can just dig into this a bit. So like right now, we look at the sort of programs that people are writing, some of the biggest ecosystem names out there, and they're not optimizing their programs for compute at all since they don't have any incentive to, right? This also sort of changes that incentive structure and kind of pushes app builders to write much more efficient programs. The tools are out there. Cavey's helped write some of them, Blue Shift, etc. But people are not really leaning into them as much as we want right now.
Yeah, and I guess that also ties in with raising block limits. So if we have higher block limits, and then we have much more resource efficient programming, then we can basically pack more complex programs into more blocks and bring that slot time down as well. So very IBRL in theory, all of this all mashed together.
Yeah, and to comment a bit more on the like incentive structure there, right? Is as I mentioned with with core devs, it fixes their financial incentive, but it also sort of like motivates them a bit more, because the way I see it is like you have these on-chain apps which are 10 times, some of them, less efficient than they could be, and the way I see it is like the core devs have invested years in performance optimizations, and it could be the case that you can deliver the most optimal client implementation of Solana that can exist. But if the on-chain systems are slow, Solana will be slow, right? And so we need to introduce an incentive to align these two parties, right? The platform and the people using the platform, to try to make Solana as fast as possible and bring, and have the capacity to bring on the world's finance.
Yeah, it seems like the apps kind of need to do their part as well, right? Is what it comes down to. And I was thinking about these incentives changing. Like I think that's a fantastic way to do it. But with the incentives actually changing, do you think that will actually affect the amount of burn expected, right? If you start taxing the toxic takers, they're probably not going to be spamming transactions as much, right? So that would kind of lower the burn. Is that?
Yeah, the way I see it is like you're really increasing we do not have the capacity to bring on the S&P 500 on chain, right? We still need about 10 or 100x more capacity. So the way I think about it is like you may see a little bit less volume on a per market basis, but we're currently in the process of onboarding tokenized stocks. Like it is happening, right?
Yeah.
And as that continues to happen, we need to make sure that we have the capacity to support them all. And you will still have plenty of opportunity for these bots to still take on some of them. So if you look at some of the numbers on the arbitrage bots, they are bidding, right? In addition to right locking accounts, serializing processing, consuming resources, and being toxic to markets. If you look at how much of the value that they're extracting goes back to the network, vast majority of the time they are bidding less than 1% of their gross profit in priority fees. So there's actually plenty of room for them. Like we can increase fees on them, and they'll still operate. You know, they'll be slightly less volume, right? But they're not going to just disappear. And you know, and with this, right, we have more capacity for more markets. And so I think, you know, it's just it is my prediction that we will see a larger amount of volume across all markets that we can support, even though we will see a reduction in the volume per market.
I like it. So you kind of like optimize the current markets that they're operating in, and once you have that going, then you have the capacity to bring on a bunch more.
Yes. Yes.
Yeah,
Yes.
I love
Yes.
Yeah. I do want to play devil's advocate for a second, Cavey and Sabs as well, because while if you look at the X timeline, everybody is pretty bullish on this. The support is pretty unanimous. There are some pockets of the Solana network and the Solana community that have raised some concerns. One of them that I saw was that, and this is something that you also alluded to, that if the most, at today's SOL price, the most complex transaction that you would be able to send through under this new tokenomic regime would cost 5 cents at current prices. How well does this scale? Like, let's say Sol goes to $400.
Yes.
Then the fee goes up a lot more. If we want to bring on global markets, we want to have everybody trading on chain at NASDAQ levels. Is this not going to hamstring that effort?
The way I see it is, if you look at the fees that, you know, users are currently paying on exchanges, right? If I go to a centralized exchange and buy $100 of SOL, I'm charged 2 to 4%. That's $2 to $4 for that transaction, right? And so the exchanges are taking far more, and this is just a tiny amount, right? Like, I don't think the average retail user will actually even notice these fees. The only people that will notice these fees are the high volume users, which are exactly the users we are trying to, there's a whole MCP, change to try to reduce some of the toxicity on the network, right? Like, we are actively trying through multiple avenues to reduce the toxicity in the markets. And so I think this is just, synergistic with some of those other changes. And I don't think, again, the retail users will actually notice much.
Okay. Is there a risk that this makes Solana less competitive compared to other high performance L1s? You know, if we start juicing this up, does that mean that people might want to start trading elsewhere?
Yeah, I think it is possible to tune the parameters so that, for example, market makers pay more, right? But we have seen the programs, and we have chosen parameters that make market makers pay less, right? And so if the toxic takers want to go elsewhere, I don't necessarily think that's a bad thing, right? What we want is market makers serving retail users, right? Tightest quotes possible. So yeah, I think, a lot of time and attention and, due diligence was done in sort of picking these parameters. We're going to start small, with the 1/10 per, Lamport per CU. And so I don't think retail users are going to be turned off by this.
Yeah, that's fair. I do have one question though, because obviously validator revenue has been a testy subject for a lot of people. Why opt to burn the SOL that gets collected from these fees instead of just distributing it to validators?
Yes.
I feel like that's an easy fix that would kind of get everybody on the same page for this. Why the burn?
Yeah, so that goes back to the incentive structure that we discussed before, right? So validators presently, if you look through the Fired Answer code base, the Agave code base, if you ask BAM how their auction works, if you ask us how our auction works, we use the priority function fee over cost, right? So if the cost of a transaction is higher, you have less priority. The validators' incentives at the moment are to accept more efficient transactions. If I have a swap for $100 of, from $100 of some stablecoin to SOL on one exchange and another on another, which is less efficient, the validator is incentivized to take the more efficient one at the moment, right? We want to preserve these incentives and align them, right? We want the core devs to build faster systems, the app devs to build faster systems, and the validators to be incentivized to accept transactions from those more efficient systems. If you give validators any fraction of the resource fee, even if it's 1%, suddenly those incentives are distorted. They are now incentivized to accept transactions that use more resources. Additionally, it's a pretty big disruption in the current market structure, right? Presently, we have this beautiful thing with Oracle updates, where an Oracle update is so efficient that it pays a little bit of fee and is prioritized above. If you suddenly give validators the resource fee from a swap, they might put some of the swaps in front of the Oracle update, right? So it changes the incentive structure and the market structure for validators in a way that is not positive. Additionally, right, the resources belong to the cluster. If I accept a transaction and verify the signature and execute it and broadcast it, the rest of the network has to verify the signature, and like execute it as well, right? So I think it makes sense for many reasons to burn it and sort of give that benefit to sort of all the holders of Sol, or all the beneficiaries of Sol.
Yeah, I like that. Sabs, I got a question for you. What's like the best argument against these SIMDs that you think?
Yeah, I think it goes back to the incentive structure, right? Whenever you do something so surgical with the economics and market microstructure, we can sit here and postulate about like what's going to happen, but ultimately, it is a very delicate sort of balance that you're tweaking with. So I fully appreciate all the criticism and, sort of like opposing viewpoints here, because that's sort of the only way we think about all these different like what ifs and get to a solution that sort of is least potentially destructive, right?
Yeah. What is it? Show me the incentives and I'll show you the outcome. Where it's like you really do have to kind of worry about how people are going to take advantage of everything when you guys are dealing with writing these. So it's definitely impressive. I had a question. So you guys thought a lot about the parameters that you're putting forward, right? Are those changeable once these go live, or are those kind of fixed at that point?
Yeah, I think so. The parameters in the ramp that we set are fixed, right? And so that's why we're starting small, right? So essentially, I think there's very little risk in the first step. I think there currently is not a way to reverse. We can put that in the SIMD. If we want to put a reverse switch in here, I think we should essentially have a long discussion, which is what this discussion period is for, about like what criteria, right? Like what under what circumstances do we sort of press that button, right? But I just go back to Sab's point and sort of elaborate on this here as well, is this resource fee, even though it does change the incentive structure, is not something that we haven't seen before, right? So there's a couple of things here that we can sort of reason about to conclude that this is a pretty low risk change. One, it's quite similar to a priority fee, right? Cost units for most transactions primarily consist of compute units, right? And so when it comes to like, so like we already know what happens when, a fraction of the priority fee is burned, right? We had that live for a while prior to SIMD 96. So like this is essentially, in some sense, approximately setting a minimum priority fee, right? Except it also extends to the other resources, right? And so we already kind of know what happens here, right? And the other thing is like the fee is very small, right? Especially the initial step. And so, many transactions will see a reduction in fee initially. And so, there are many reasons why I think it's a low risk maneuver, but I do think we should discuss any sort of reversal criteria.
Yeah, that sounds good. I like the way that's set up. It seems very well supported in the way that it's currently written, right? But to kind of start small like that and see, all right, what are the effects from 1/10 of what it will be? Let's see what happens, live in production, and go from there. That seems like a good way to start out.
Yeah. I have a question on behalf of the smaller stake validators, the independent guys who are doing it tough amongst the economic squeeze they're facing. Some of the validators have said that this is going to cause an arbitrary revenue loss to a lot of these validators. Is that true? Is that valid? Is that something that we can overcome? Is that something that will be solved by Alpenglow, in a few months? Is this a necessary sacrifice?
It's not a necessary sacrifice, and it can be fixed. But I would like to sort of discuss how we arrived at these parameters, specifically on this front, right, on the validator income, which is, what is the base fee today, right? It's 5,000 lamp ports per signature. Half of that goes to the validator, half of that is burned. 96.5% of signatures on mainnet, of transactions on mainnet have one signature, right? So for the majority of transactions, the validators get, their 2,500 lamp ports. The resource fee SIMD changes the part that the validator gets to a fixed static 2,500 lamp ports, regardless of how many signatures. The reason for this is because the current cost model on Solana has a number of signatures component on there. So if you were to scale the inclusion fee along with the resource fee, you're essentially double charging users, right? And so the loss that the validators are currently complaining about is that, when I do get that transaction with 2 signatures, I don't get twice as much in the base fee. And to that, I have to say, well, one, we can increase the inclusion fee, right? It doesn't have to increase much, right? The average number of signatures per transaction on Solana is 1.04, right? So we're talking about a 4% change in the base fee income. Now, validators do not make most of their money off the base fee. It comes the majority from, vote commission if they have that, the priority fees, or any MEV commission. Base fee makes a very small portion of the total income. And so this overall is far less than 1% of a reduction in validator income. Now, they are very, in my opinion, it's somewhat reasonable for them to say, well, we don't want to support any reduction, right? Even if it's 0.1%, because, suddenly the next MD is going to do the same thing. And, we're just going to keep sort of, cutting away at our income. And so, yeah, I mean, we can increase the inclusion fee parameter proposed and fix this issue. That's not a blocker here, right? The main thing about the SIMD is not to reduce that income from validators, right? We sort of saw keeping it at 2,500 as the most minimal change, right? But again, if there's disagreement and the most minimal change is to kind of honor what that average base fee was, we can raise it. So yes, it's not a blocker. The other thing I'll say is, if validators are concerned about this base fee income, they need to be concerned about inflation, because base fee does not scale with inflation. In a year, right, when there's 3% or whatever more SOL in circulation, that base fee is less, right, is a smaller fraction, right? And so, the amount of money they'll lose from inflation over a long period of time from this base fee revenue is greater than the loss proposed here. And so, I think long term, as is, I don't think this is a reduction in validator income. But again, it's not a blocker, and we can fix that immediately.
Yeah, just to also give some numbers here. I looked into this, and overall, a 200,000 SOL staked validator would only lose a hundredth of a SOL a day because of this reduction in the base fee, essentially. So it is truly just a trivial amount, right?
That would only be like 3.6 SOL per year, wouldn't it?
Mm-hmm. For a 200K SOL validator. Across the network, it's about 35 to 36 SOL per day lost across all the validators. Yeah. So it's not much, but we can fix it. If that's a blocker, we can fix it.
Yeah, so actually pretty negligible at the end of the day, I think, that loss, which is very encouraging. I had a side question, maybe a bit broader. Obviously, you guys at Temporal, Harmonic, Humidify have done a huge amount of work making your Oracle updates as efficient as possible. And this proposal actually kind of benefits that to a degree. It makes them cheaper as well. Can passive AMMs survive in the direction that Solana is going if we are leaning more and more into this prop AMM landscape with more tokenized equities and things coming on chain like that, and we're playing into making Oracle updates more efficient and cheaper for everybody? Do passive AMMs still have a role to play in on-chain DeFi?
Yes, and the way I sort of think about it, right, is I think the optimal market making methodology and sort of the strategy and the thing you sort of employ depends heavily on what it is you're market making. right? So if you how much does it cost to operate a prop AMM, right? If you submit one transaction with a price, right, every slot for a year, that's $30,000 at the current SOL price. If you have a long tail asset that gets one swap a day or one swap an hour, that the amount of retail volume coming in there does not justify operating a prop AMM on there, right? And so constant product AMMs, right? Passive AMMs will always, in my opinion, have a place in the long tail, right? I do think, right, as we've seen, in the highest volume markets, it's not even about the prop AMM itself. It's about just like the entire stack. Do you have quantitative methods, predictive methods? Do you have the dark fiber and the microwave links? Do you there's none of this stuff is in the constant product. So in terms of like, do we have hope that a constant product will ever outcompete the best quants on the planet? I don't think that was ever going to happen, right? The constant product was made to be computationally efficient, not to make money. And so I think prop AMMs have sort of earned their spot in terms of the highest volume markets. But we will always see the long tail be on these other sort of mechanisms.
Yeah, well said. So one of our stories later today is going to be that we're at an all-time high of transactions on Solana, right? It kind of seems like we're heading towards the super cycle for on-chain transactions, but not necessarily for price. So, if you look out like 2 years in the future, let's say this passes, do you think that this is going to have like a pretty big impact on that and change that? Is this going to lead to?
I mean, we hope, right? I mean, obviously there are things beyond our control, right? But things are great, right? There's going to be more demand for SOL, right? There's going to be, because of the change in the market structure, it's going to be even tighter quotes than there are now, right? Perhaps more users coming on. So yeah, I'm very optimistic, but it's hard to predict, right? There could be an outage, there could be a war, there could be, who knows what can happen. But all we can do is fix the incentive structure, right? Which is what we're trying to do, right? Try to make Solana the fastest place and the best place to trade and own, basically, any asset. So.
Okay, and one final question, guys. We've seen Ethereum play a lot into this idea of ultrasound money. If both of these proposals pass, do you think that that's somewhere we can go? Do you think that we can actually end up net deflationary on Solana?
Yeah, if Solana wins, and if we bring finance on chain, the current parameters in the SIMD, it's possible that it can become deflationary. It's definitely within reach, not at current traffic, but it's definitely possible.
The traffic will come. Build it and they will come, as they say. Listen, Cavey, Sabs, thank you so much for coming on, guys. It's been an absolute pleasure having you and picking your brains about this, and also kind of getting into a lot of these concerns and criticisms and airing them out so that everybody has quite a clear answer, I think. If anyone still wanted to learn anything more about these proposals, where would you recommend they go to read? I know you published a paper earlier. Where would you find that?
Cavey.xyz/defense is my defense of this proposal. It's a 16-page document. It tells you what's happening on Solana now, how what motivates this mechanism, and a bunch of numbers in there. So that's definitely place number one. Place number two, you can send me a message, or Sabs a message.
Sabs, any last words from you?
Yeah, temporal.xyz/writing. We got a couple blog posts out about this too, written by Cavey himself, but they're there. And if anybody wants, app developers, anybody wants to reach out to us about how to write more efficient programs, use less CUs, please do. We're more than happy to help. We're all in this together. So yeah, thank you for your time.
Yeah, fantastic. Thank you guys for coming on. Cavey, I'm a huge fan of your Twitter account. Keep the shitpost going. But really appreciate what you guys are doing. It sounds like you guys have worked really hard on this proposal, and seeing the support behind it, definitely proves that out. So
cool, awesome. Yeah, thank you very much.
Yeah, thanks, guys.
Cheers, guys. Well, Thomas Bahamas. What do you think? What's your takeaway? Are you bullish SIMD resource burn fee?
I'm quite
553?
bullish. I'm
553.
quite bullish. I mean, I feel like this is what Solana's needed for a long time, right? You know, like what I just said, like the on-chain super cycle of transactions. Like I believed in that for a while. We're seeing that play out. We're seeing all these positive things happen. But you know, the way that it's trending, you know, the more demand isn't necessarily tying value to the underlying asset, where this seems like the right way to do it. And you know, to be honest, like I didn't know that much about the underlying incentives. So like that was like refreshing to hear, you know, if something isn't, you know, trending in the right direction, you change the incentives to build that and build a better market structure. So yeah, I mean, I'm feeling pretty bullish right now. How about you?
Yeah, I think I like the idea of finding a reason to make developers work harder to make more efficient code. I feel like
Yeah.
that should be table stakes, and I think people have maybe for many years been able to get away with being lazy in this regard. If we can try and find a way to monetize that and funnel that economic activity into Sol value accrual itself, I think that's probably to everyone's benefit. I didn't realize how little the validator revenue loss was going to be. You know, if you've got a 200K stake validator and you're actually losing 3.65 Sol a year, give or take, you know, obviously it sucks. No one wants to be making less money, but at the same time, it seems like a negligible sacrifice if it means that Solana just runs better long term.
Yeah, yeah, and I mean, ultimately, if they're able to, you know, have more transactions and have, you know, there is a lot more markets on Solana because of this, they're going to end up making more money in the long run, right? So yeah, I don't know. I feel pretty good hearing that.
Yeah, I think everyone wants to see Sol go up, and if this is something that can do that, people are going to vote for it. I think support has been pretty unanimous already so far, especially on the X timeline. And I think
Yeah,
even in smaller validator groups, a lot of what I've read recently is that people are spiritually aligned and they're just kind of working out the final implementation details. So obviously there will be some dissenters. There will always be people with differing point of views, but I think it's pretty likely that these pass. Shall we crack on to our fantastic newsletter, Mr. Thomas Bahamas?
yes, we should. Want me to pull that up?
Yeah, we'll pull that up. Um, Funny day in markets, Thomas. It's feeling like Bitcoin is just grinding up. Nothing can phase corn. The internet's favorite store of value is up around 3 to 4% this week. Even ETH is making a move. So despite the chaos that's happening in the world, despite us getting the 40th Iran deal between the US and Iran, look, it's starting to feel like maybe it's crypto's time to shine.
Yeah, yeah. And you were just mentioning some prices there, so I pulled up CoinGecko to just show that. I mean, Bitcoin's at 65K, and I think one of our top stories today is how Michael Saylor was selling Bitcoin. So somehow that ends up being bullish, right?
Yeah, well, look, the other day, I mean, a few months back, Saylor sold 32 BTC, and the market completely lost its head, and we completely
Yeah.
tanked, and everyone said, right, Saylor's going to be fully unwinding. We were concerned on the show. We were saying, what is Saylor doing? What is the risk if Saylor does implode? Here we are, a few weeks later. He's just sold, I think, $100 million in the space of a week to extend the USDC reserve for dividends. And Bitcoin doesn't care. Bitcoin's grinding up. It's encouraging, right? I
It
think it
is.
alleviates a bit of that implosion threat that people have been worried about. So look, it's a great start. Now, you mentioned earlier, on-chain activity on Solana is at all-time highs. You know, price may be in the gutter comparatively to the highs of yesteryear, but activity is booming. We've got more happening on-chain now than when Trump coin launched, which for me is a completely mind-boggling stat. I wouldn't have believed that if you told me that without seeing the charts.
Yeah,
Oh,
that really is mind-boggling. It's such a confusing market, right? You know, Michael Saylor selling is bullish, it's bearish a different week. You know, you'll hear people say how different chains are dead. There's on-chain is dead, but I don't know, meme coins are ripping all-time high transactions. Like it is a pretty confusing market in general.
yeah, it is, and it's funny to see this meme coin resurgence actually get kind of a sustained bid. I was thinking that maybe we'd have Ansem, and then we'd have a few other smaller pops, and that things would slowly fizzle out. But the volume is still there. You know, meme coins are once again challenging Sol stablecoin for the highest share of volume on chain at the moment. Um, Look, it's good for the chain in any case. It's boosting those transactions. If these measures go in, as we've been speaking with Cavey and Sabs, then that's going to drive value accrual to Sol. So, long may it continue.
Yeah, yep, and, you know, as you say in here, you know, Solana is looking good here. It is looking great, right? I'm very excited about these two SIMDs. I think they're I think they're coming at the right time too. I think that there's just like everything's kind of coming together at the right time for Solana. So I am just incredibly bullish.
Yeah. And alongside that, we've also got Alpen Glow. We've also got dropping slot times. I think at a fundamental level, I feel like I say this every week, at a fundamental level, Solana has never looked better. But if you want to scroll down, we can get cracking through the top 6 stories of the week.
Sounds
First
good.
one here, we've been speaking about this at length with Cavey and Sabs. 2 governance proposals coming in. One is going to double the disinflation rate and send us to terminal inflation a few years faster and save, I want to say, about $1.5 billion in emissions. The other, as they mentioned, is going to introduce a resource fee that's going to take all of the activity that happens on chain, all the wondrous variety of apps that we've got, and they're going to start using that ecosystem to bootstrap a bit of buy pressure for Sol and burn pressure for Sol as well. So very, very encouraging. Thomas, anything you want to add to this after what we've been speaking with Cavey and Sabs about?
No, I mean they went way more into depth than I would have, but I mean it's I mean aligning the incentives between like just the market makers and getting rid of the toxic takers. I feel like that was like quite interesting to learn that it's like that's gonna fix not fix, but it's gonna incentivize great activity, for us, right? As the end users, because of this, we're gonna be getting better rates. It's gonna be a lot better for us. And even if, there's a small increase in the fee that you pay, you're getting a better rate. So it's probably negligible, right?
Yeah, and again, those raised fees go back to buying Sol. So if your Sol goes up because of it, then you're probably going to be happy regardless.
Yeah, yeah.
Yeah. Pushing on to story number 2, the headline reads, Solana transaction activity hits a new all-time high in midst of crypto winter. Now, as I mentioned earlier, you wouldn't believe it looking at the prices, but Solana's on-chain activity is absolutely buzzing. This graph is up and to the right. This is non-vote transactions. So for those who don't know, voting transactions is just validators talking to each other to reach consensus, basically. And it's not a great measure of general user activity. So non-vote transactions that exclude these validator votes is a better measure of how many people are actually firing up their Phantom wallet, firing up their Solflare, sending money to each other, buying things on chain. This is the better way of measuring that, and it's up and to the right. More so than Trump, more so than Ansem. The last week was the biggest week in Solana's on-chain history. Incredibly encouraging, and I think there's more to it than that as well, Thomas. Application revenue is actually on the rise again. So since obviously bear market, people are trading less on chain, application revenue is going down. That trend is starting to reverse. From around April, I think we bottomed, and steadily, slowly, the revenue that's being made by applications like Pump, like FOMO, like Axiom, that's all starting to trend up. And just earlier on August 4th, app revenue reached 4.44 million, which was the highest daily revenue generation in the last 6 months. So very, very encouraging. People are flooding back. Do you think that there's a future for this outside of meme coins? Do you think that there's going to be some breakout app that is not meme coin related that can actually push this higher?
Man, I sure hope there is going to be. It does kind of feel like there's a bunch of different sectors that are like currently firing on Solana, right? We've got the RWAs, stocks on Solana. I feel like those have been, up and to the right as well. I feel like the spot markets are tighter than ever. Like I can't remember the last time I actually transacted on a centralized exchange, just because you can pretty much trade most things that you want on Solana already and at better rates. Perps are firing, right? Phoenix had their big incentive campaign, and it looks like it's sticking, right? They're getting a lot more volume, a lot more OI there, and like you said, the apps are ripping too. A lot of the apps do seem to be around meme coins and meme coin trading, but yeah, I mean, I still think that there is room for some sort of app outside of memes, but I mean, you also just have to chase what people are doing, and people love the memes, right?
People do love the memes. Thomas, if you can scroll up a wee bit and click into this article and then scroll all the way down to the bottom of the article, I think there's an interesting stat that people might gain some knowledge from. We've mentioned obviously meme coins are the extreme revenue generation machine of the chain, but the way that people are trading meme coins are changing. So in the past, it was platforms like Axiom, like Photon, like Trojan that were absolutely minting it. They were just printing revenue based on fees, based on user fees, based on volume. Scroll down a wee bit more for me, sorry, Thomas. what's changed is that a wee bit more. There's a nice little grid right down the bottom. Keep going, a wee bit more. This one here. So on this graph, you can see that the second highest revenue generating app after Pump was FOMO. So FOMO, unlike platforms like Axiom, like Trojan, which are hyper intensive, they're for professional meme coin traders in the trenches. It's got multi-wallet, it's got everything you need to be as militant and as PvP as possible. FOMO is very much you have one account, you state your thesis, it's social trading. There's a lot less of this kind of very aggressive PvP style trading within FOMO. And this tells me, Thomas, that maybe we're out of this hyper aggressive PvP trading trenching style, and we're more into this social trading where you take a position, you share your thesis, it all happens in one account, and it's a bit more conducive to healthy growth. Now, obviously, you can have side wallets and you can load up and then go to your FOMO and fire it up. So, there is that element there as well. But for me, this says that the way that people are trading meme coins on chain is also changing.
Yeah, 100%. I mean, you see the rise in just the use of FOMO, right? I forget exactly how many users. I know a week or two ago it was over 500,000, and I'm sure that it is up and to the right from there. I mean, the social aspect with meme coins is crazy. You open the FOMO app and you see how much money some of these people are making, and you instantly want to use it and copy trade them. It's a little addictive, right? So they really nailed that experience, and it shows in the use and how people are actually trading them. I always, I always wonder, like, I wouldn't really want to be making big transactions on FOMO. Like, I always wonder if people are like pulling their private keys out and using other like systems to actually trade. Is that what they're doing, or are they just YOLOing all in FOMO?
I don't have an answer for you. I think I too would be skeptical of moving six figures through a
Yeah.
through a mobile app. But look, I'm sure FOMO's thought of that. I'm sure they've got some great security measures in place, and also look, you might be right. Maybe they are exporting it out and trading it elsewhere. But look, at the same time, it's changing the way people are trading. We're moving towards more social trading, and I think there's a whole world out there of FOMO traders that on TikTok, they're on Instagram, they're not on CT, and they're actually breaking out into the world beyond our little CT bubble. So I think that's quite encouraging as well.
Yeah, exactly. And I think that was actually what the founder was tweeting about recently. Was he was saying that these are not CT, this isn't like crypto native users that are coming onto this. These are outside, right? These are people coming to the chain and using it. And anything that can bring people on chain, I think is good. And whether it's they're trading 10K shitters or whatever they're trading on there, I think it's a good introduction to the chain. Hopefully it's sticky and they stay around, right?
Yeah, I hope they come when they make money instead of coming and getting rinsed like people did in 2025, 2024. We'll come back to the news there itself and push on to story number 3.
All right.
This one we touched on earlier. Strategy sells 1,637 BTC to bolster USD reserves. Now, Michael Saylor, love him or hate him, the man told us never to sell our Bitcoin, and for the third straight month, he has been a net seller. Obviously, people called him out for this, and he's actually separated the line. He said, I haven't sold personally any of my stack, but Strategy is selling. So Strategy's idea here is to increase their USD reserves. Sorry, they want to continue the stretch buybacks. They want to push the boat out a wee bit further. I think that runway now for dividends has gone to 2.3 years. So that's given a lot of confidence to stretch holders. For me, it doesn't solve the problem, right? I still think this is a bogeyman that's needs to be solved or addressed before Bitcoin can truly move on. But look, Saylor's proving that he's capable of at least extending the duration. He's pushing the boat further up the river. Maybe he can just outlast it until Bitcoin goes up again. What's your view? What's your read here?
Yeah, I think if anybody can outlast it until Bitcoin goes back up again, it is Michael Saylor. And also, what he's doing is good for the stretch. Like the price of stretch is at 95.20, right? So it was down in the 80s. People were calling for it was going to collapse. So I think that what he's doing is showing confidence, and I think the market is liking that, right? So it's not an imminent disaster that's pending, but it's I mean, it's definitely not the best product. I wish it wasn't out there, right? Like it's I guess it was a good idea to help him buy Bitcoin, but at what cost? Putting, selling his stack is not optimal. And we were talking before, he somehow was able to buy the top forever. He was buying Bitcoin over 120K, and now he's selling the bottom as well. So it's a very, it's not the ideal setup for what he's doing, but given where he is, it needed to be done, right? I think that the risk of blowing up is a lot lower, and that's why the market's pricing it that way, right?
Yeah, I think Saylor's, or strategy, I should say, strategy's average acquisition price is around 75K, and I think they're down probably 5.5 billion on their full stack. So, all this effort, all this financial engineering, all this scheming to just permanently top blast and permanently, liquidate at the bottoms. It's not a good look. I hope that Saylor can at least figure out his strategy, and that can get back on the horse. There is another layer to the story, Thomas, and it deals with that immediate danger you mentioned. Unfortunately, there was a cold card exploit. A lot of the Bitcoin OGs who were true tenants of the self custody thesis, they've been hit pretty hard by this bug, by this hack. Earlier the week, the reported losses were around 88 million. I think that's now risen to 130 million. And obviously, this is devastating. I think if you were someone who was storing a Bitcoin in a cold card, you were someone who was long term. You were the kind of person to lock it up in a bank vault and check on it once every 5 years. Self custody is maybe starting to be a bit of a problem. I think 99% of people would be better off buying the ETF or holding their Bitcoin in a centralized exchange. And that's a bit of a departure from the steampunk, cyberpunk values that crypto started with. Do you think that issues like this are kind of devaluing the USP of Bitcoin? Do you think that if we steer away from self custody, that Bitcoin loses its inherent value?
Yeah, I mean, I hate the direction of this, right? Like if you do everything right to force self custody to store your Bitcoin and then you get wiped, that is just terrible for everyone involved. I do think that, I mean, the way that Bitcoin has been going, it has been, you know, self custody is not as common as it used to be, right? That was like one of the core tenets of Bitcoin, and if you looked at it now, it's probably not one of the core tenets, right? It's ETFs, it's in your 401ks. It's not self-custodied as much, right? But I mean, in Solana, we're pretty big on self-custody, right? A lot of people, they're custodying their own coins. So it just brings doubt into self-custody. I don't like that. It's like we saw on Solana and ETH, DeFi protocols were getting hacked, and now is Bitcoin's version of that, cold storage wallets. It's scary, right? Because they're not like lending their bitcoins out or anything, right? They're just holding. So I don't like that. Like it scares me. And you've been seeing people calling on the timeline like, what's safer, a Ledger hardware wallet or Coinbase custody, right? And maybe for the time being, while there are exploits out there, maybe a centralized exchange isn't the worst idea, right? If you would have asked me that same question a year ago, I would have in a second said a Ledger, right? But it does kind of bring things into doubt. And I mean, if there's a small percentage chance of you getting wiped out of your self custody, it's a something that you might want to consider, right?
Yeah, it is. It is a terrible event. If there is one silver lining, it is that between Saylor selling $100 million worth of Bitcoin and this $130 million exploit to some of the oldest Bitcoin supporters that have ever existed, Bitcoin is up 4% on the week. So
Yeah.
price is completely unaffected by these difficult events, and it's encouraging, Thomas. It signals more of a bottom than a top. If we're having bad news and prices still moving up, look, it's very encouraging for the coming months.
Yeah, and I mean, on trading floor, we did have Sin come on and show us that this is the start of the next 4-year cycle, right? He kind of broke down the technical reasons for why, showed us the RSI. He had me do the charting on it, so it's a little sloppy, not as tight as it would have been if he was doing it. But it's I don't know. I haven't seen that positive of news for Bitcoin in a while, so it kind of left me feeling good about Bitcoin. But I think we just need to avoid the headlines for a little bit, right?
Yeah. Yeah. And look, the bearish divergence was pretty telling. It was a pretty compelling thesis he laid out. So, maybe this is the moment to reallocate to Bitcoin, but obviously not financial advice. This is not the place for that.
Yeah.
We'll shift back to the newsletter for story number 4. I really like this one, Thomas. Kamino launches institutional commodity yield vault, bringing $4.2 trillion market on chain. Kamino obviously needs no introduction. This is the biggest lending market on Kamino. They've just launched a new vault, which is powered by commodity trade financing. Absolutely massive real world market. These are the guys who ensure that if you buy $10 million worth of copper or $15 million of wheat, these are these commodity trade financiers are the people who ensure that these transactions go through smoothly, that they're ensured that everyone gets paid, and that the quality of the goods is up to scratch. Kamino has somehow figured a way to package all of this up into a tokenized vault that's going to pay around 7 to 8% APY for holders. So brilliant job by Kamino on that. The vault has got a deposit limit cap, I believe about 25 million for now. But this tells me just where Kamino sees the future is going on chain. Obviously, Kamino started as a very crypto native protocol. You were borrowing against your soul. It was very, very DeFi specific. They're really broadening that exposure. So much of Kamino's deposits are now RWAs. I believe it's around 31%, I want to say, from looking at some charts earlier. And that I think is probably only going to grow. We saw earlier last week, there was the auto launch. Prime has done incredibly well over there as well. So basically, any kind of yield-bearing RWA, Kamino is making itself a real hub for it. Thomas, have you looked into this commodity yield vault at all? Have you played around with it and explored a bit about how this all works?
I really haven't, but I need to because this is also interesting, right? I feel like Camino's been absolutely crushing it lately. They keep bringing in like extremely unique RWAs where there's yield, right? We have yield coming from very strange places, and I love it. I think that this is, I think that there's probably a lot of demand for yield that's not directly coming through DeFi protocols at the moment, right? Like this is coming through a DeFi protocol, but the yield's coming from outside, right? Like it's not directly on chain. So I think that, I don't know, at least in my opinion, like I'm not like lending out to a lot of places to get yield, but this seems like a pretty, I want to say a safe way to get yield. That's probably not the term that should be used, but it seems like there's, it's like TradFi yield coming on chain. So I like the direction of this. It definitely seems like an interesting product, and it seems like something I need to check out more of. Have you been playing around with it at all?
Look, I dropped in some play money just to check it out and kind of familiarize myself with how it all works. I think it's a very encouraging step from Kamino. I think branching out into these real world yield sources and then packaging it up for people on chain, I think this is only going to grow. I think the more capital that comes on chain, people are not going to be wanting to generate yield by deploying in liquidity pools or doing all kinds of high risk things. I think safe, stable, safe is the word with the asterisks around it always, but stable real world yield, I think, is a massive product vertical that is only going to continue to grow.
Yeah, and I mean 7 to 8% yield's pretty good, right? I think that's higher than what a lot of like the stablecoin yield is for other sources, right?
Yeah, I think on average you kind of expect like 5 to 6% for general
Yeah,
stablecoin lending. So if you can get more than that, you're laughing.
yeah.
Speaking of stablecoins, speaking of liquidity sloshing around, we push on to story number 5. We have Solana crypto cards just had their biggest month ever with $69.5 million in volume. Look, there's no denying it. Crypto cards are a runaway train at this stage. I feel like everybody who is in crypto has got one, and it's breaking out, Thomas. If you look at this chart here, Re.Pay processed over $395 million in July alone. Cast, our Solana native friends over at Cast, a third in this list with $89.6 million in monthly spend. This is a staggering growth trend, Thomas. If you compare this to 2 years ago, when it was only a handful of million going through crypto cards, the growth is incredible. Are you a crypto card user? Or is that something you find convenient?
I'm not. I have a couple of them and I don't really use them. I mean, to be honest, I'm in the US and like I can just, withdraw and use a credit card and get rewards in crypto. So I don't personally use them, but I recognize the use for them. Like I see the need for them. And I mean, with the massive success that stablecoins have, like a lot of the in real life places haven't caught up to it, right? You can't send stables to buy your candy bar or your gum or whatever you're going to be buying, but you can send those stables to your debit card and spend them on the spot, right? I think that's kind of like bridging the gap between like on chain and in real life. And I mean, it's seamless. They're really good cards now. I have the cast one. It's like the Solana version. It's pretty cool. I know that, yeah, I've got, I don't know. There it seems like all of the wallets also are starting to have one as well, like Jupiter and Phantom. So they're making the experience very easy. So I don't know. I mean, I like the direction of this. I just, personally don't necessarily use them that much. How about you, Finn?
Yeah, I'm in a tax jurisdiction that doesn't like these kind of payments, so I kind of need to avoid them for that reason. But something that does stand out to me here is that Cast is far and away the absolute leader on this. Avicii is coming in second, but they're at, I want to say 3 million compared to Cast's 89. So do you think there's room for a competitor to come in and challenge Cast here, or do you think that the game is won at this stage?
Oh, I think that this space is going to grow so big. I think that they definitely can. I don't know what what the catalyst would be for a different one. Like these platforms work, right? Yeah, I know Avicii kind of came on pretty quick. They had a pretty big rise right away, so that was encouraging to see. Like I know that Cast kind of has some rewards. I'm not sure about the details of them, but I mean, if you can get good rewards for just spending money in real life that you would spend anyways, it seems like a pretty good way to go about that. And I mean, if you don't have to off ramp anything, there is no off ramp risk, right? That's like you could live you could live fully with crypto if you as long as you have a debit card in most places, right? That it gets you over the in real life spend that you would need. So I like the direction of it. I don't know what the next version is going to be, what's going to take off, but I yeah, I'm bullish on these. I like them.
I think it's one of the things that people have been asking for a very long time is, crypto's great and everything, but how can I actually use it in my real life? And crypto cards answer that for 90% of people. If you can hold your soul and you can still, go to the shop and buy your coffee and pay in soul just using a card, that I think is a massive unlock for a lot of people. And it shows that there is genuine, real world, tangible value to these assets. So yeah, it probably continues to grow. Cast probably continues to dominate. I would love to see a challenger. I would love to see Avicii climb here and put a dent into that market share. And like you say, it's actually still in its infancy. A lot of this, it's 1-2 years in, so no game is won at this stage. The pie is only going to grow larger, and people are more than welcome to compete for their larger slice of pie, I would say.
Yeah, 100%. I bet if you looked at the total amount of spend across all debit cards and credit cards, this isn't even like 1% of that, right?
Yeah,
So
not even a drop in the ocean.
yeah, exactly. So there is a lot of room for that to go up. Whether it's the current leaders, whether it's Cast that's going to continue taking off, or whether it's a new competitor, we'll see. But I think the space in general is going up.
Yeah, I'd agree with that. Shall we push on to our final story of the week, story number 6?
Yes.
The token is dead. Eliza Labs founder pulls the plug on AI16Z after treasury settlement. Thomas, this is a name I didn't expect to see in 2026, but here we are. Eliza OS, better known as AI16Z, has wound down. Unfortunately, the foundation has basically thrown in its chips because they were litigated by Berwick Law. Berwick Law, after many years of campaigning against the meme corners of the world, have finally won the litigation. I don't know how many they have won compared to how many they have not won, but they finally got something on the board. So I guess well done to them. It is still a sad day, I think, because AI16Z meant a lot to a lot of people at a certain point in time. It pioneered one of the more euphoric metas that we've had that lasted for a very long time. But it also, I think, exposed a lot of what is wrong with this industry, and that's what Shaw is saying. Shaw Makes Magic is the founder of AI16Z, obviously, and in his kind of parting statement to everybody, he said that it boils down to a culture of people who don't take responsibility for their gambling habits. You cannot appease the mob. Poor Shaw, he, basically this is a long statement that says that he worked incredibly hard for a very long time. He's actually a very normal guy, and he, paid himself a modest salary. And people were just always begging him to do something that was going to make the token go up. I imagine that he got all kinds of, criticism and slack and threats from all kinds of people. So I think he's probably pretty happy to be moving on from this. But it does mark the end of an era for a way. Like, at the same time, it's fine to say the token is dead, because for me, the token has been dead for quite a long time. But at one point, this was a $2 billion token, Thomas. I don't know if you played
Yeah.
much in the AI meme coin cycle, but what does this mean for you? Do you think we're going to see more things like this, where meme coins of yesteryear get threatened by litigators?
I don't know. I did miss this coin. But I mean, I watched this go to $2 billion and was like, why am I not in it? But I mean, I'm kind of wondering what the implications of this are, right? Berwick Laws had, hundreds of suits is what it seems like. And now that they finally won one, I'm wondering what the implications are for other tokens, right? I think tokens in general are tough, right? They're great when they're going up, and really bad when they're going down. How responsible can you be for a token going down and for people, losing money on a token? I think it's tough. I think my personal views are, people need to have responsibility with their money and, not make crazy decisions. However, that's not what we see in the charts, right? So, people are going to do what they're going to do. And, I hope that this doesn't turn into, them, going around suing other people that launch tokens and actually were trying to do the right thing, right? Because that could be, I don't know, that could be pretty bad. I don't know. What do you think the implications of them finally winning a suit is, Finn?
I don't think it necessarily sets a precedent that is going to be long-reaching and resurgent. Let's say. I think part of what the issue was here was that Shaw was a very public figure. A lot of other meme coin founders, or even project founders, aren't as public as Shaw was. He was a very, very known person amongst the community. And he said that they didn't have the financial stability to challenge the litigation. So I don't think this is going to kickstart a wave of other, meme coin founders getting litigated. I don't think this is going to start a bunch of issues for other protocols that are going to get sued by Berwick Law. Berwick Law has sued dozens, I believe, of coins, and this is the one that has kind of made the headlines as something they've won. I think it's a flash in the pan. I don't think this is going to be commonplace in the coming weeks or months.
Yeah, well, apparently, a friend of the show, Mike Dudas, made a tweet about this, and it seems like, the lawsuit, was a winning outcome. It wasn't a winning outcome for anybody but the lawyers. So it
Yeah.
seems like the lawyers, which I mean, is just like the worst case scenario, right? Like these lawyers make a bunch of money and everybody else suffers. So I don't like that. Um, but yeah,
Yeah, and I think Wazzy Lawyer as well said this was a terrible outcome for that industry, because look, Berwick Law is basically going after everybody, and if that kind of gains some momentum, then that's probably doesn't look good long term. Even called them classic ambulance chasers, is his word here. So, look, a lot of diatribe sent towards Berwick Law for this. Tough times out there in the AI meme coin markets, but look, I think that a lot of people have kind of moved on from AI16Z. I don't think a lot of people were holding at this stage. I think the damage to this coin had already been done long before
yeah,
this happened.
yeah, yeah, and yeah. Let's hope that there's no more of those, right? I feel like there was a big, the big AI and crypto coins together that a bunch of them just ended up being nothing, and it kind of I feel like it kind of stalled a lot of like AI development combining with crypto because there was so many that were ended up being scams. So I think we've moved past that, right?
Yeah, I think there was a lot of vaporware in that meta. Probably a lot of vaporware dressing up as being something more than it was. And some memes are honest, some memes are memes for the sake of memes. This was a lot of memes pretending to be things that they weren't. I'm not saying AI16Z was a case of that, but it certainly inspired a lot of copycats of that vein. Should we push on to honorable mentions this week?
Yeah, let's check it out.
All right, pretty short little list. We'll take it away. Honorable mentions, week ending. Solana Perps open interest hits 500 million, its highest level in 9 months. Tokenized gold supply on Solana up 689% since August 2025 per Bird Eye data. Solana stablecoin supply hits a new all-time high of 15.7 billion per Blockworks. Perena launches Smart Borrow, enabling users to borrow against crypto while compounding USD star. And All Unity launches CHFAU, a stablecoin pegged to the Swiss franc. Thomas, what do you reckon? What stands out?
Yeah, I mean, there's a lot of good things on here. I was kind of taken away by this tokenized gold one, right? I didn't know that tokenized gold was so big, and it's up 689% since last year, last August. That's pretty massive, right?
It is massive, but actually looking into the data on this, it's a huge growth trajectory, but we're still so far behind Ethereum on terms of tokenized commodities. Like Solana is the undisputed home of tokenized equities. So much stock trading happens on Solana that we've kind of nailed that. But in terms of tokenized commodities, we're still far, far behind. And this is a huge market. Obviously gold, silver, oil, wheat, everything that also Kamino is, now trying to work on as well with their commodity financing. Yeah, there's a long road still to be run here, I think.
Yeah,
if I had a
I'm
favorite,
bullish gold.
yeah, bullish gold. We like gold. If I had a favorite, I'm torn between a stablecoin pegged to the Swiss franc. I think that's brilliant. I think the Swiss franc, is one of the most resilient fiat currencies in the world. I think having versions of that on chain is to everybody's benefit. And the other one I like is Solana Perps hitting 500 mil in open interest. I think this is the highest level since 9 months, since since that event that we no longer speak of.
Yeah.
And I know a lot of it is just driven by incentive campaigns, but at the same time, perps is a massive, massive growth vertical. And if people are there trading perps, that's only going to be good for Solana. So yeah, good
Yeah.
signs and honorable mentions all around.
100%. Question for you on currency. So bringing the Swiss franc on chain, I think is awesome. Do you think we continue to see like all currencies just come on chain, and it's going to be, pretty universal, or what do you think? How do you think that goes?
I would love to see every single fiat currency in the world on Solana. I think that's table stakes. If we go towards this NASDAQ on-chain vision and we have global finance happening on Solana, we need to have every global fiat currency represented there. So yeah, would love to see it. Other thing we want to mention there, obviously, shout out to Phoenix, who is driving a lot of that open interest for the perps. That campaign is going incredibly well. Volume and open interest on Phoenix has skyrocketed. It's brought a huge amount of people back to the platform. I went back there, to trade, to try and see how these incentives were playing out, and the product has improved a lot. So, this open interest surge, I would say, is pretty justified.
Yeah, definitely. It's one thing to have an incentive program, but another one that actually like highlights how good of a platform you have and is proving to be a little bit sticky, right? So I want to see that continue to go, and I'm still excited for them to be bringing those perps onto JTX so we can start firing up some longs on the trading floor.
Let's go. Hopefully soon. Next up, Thomas, you spoke with Rebecca Rettig, who's head of legal over at Jito last week. Is Clarity doomed? This is the question that a lot of people want answered. They're not going to be voting on it before the recess. That can has been kicked even further down the road. Is it over for Clarity?
I don't know if it's over, right? So I think my main takeaway from that conversation was that overall this bill is very good for consumers. Like it should be passed. It's kind of being politicized and being kicked down the road, but it eventually will pass. The other takeaway is even if it doesn't pass, it's not over for crypto, right? Like we're going to be fine if it doesn't pass, especially now that it is pushed down the road a little bit. That doesn't mean it's not going to pass still, right? So I think that we're going to be okay without it in the short term, but it sure would have been nice to pass, right? That I think that it does have a lot of good parts in there, and we want consumers protected. We want people that are bad actors to not be in the space, and this kind of outlines a lot of that market structure, right? So I don't know. I wish that it passed. It didn't. We were saying on this show last week and the week before that we think it was going to pass, but we'll see. Is by the end of the year, hopefully.
Yeah. Look, asking around, the consensus is that we get stuck in a bit of a quagmire in September, and that following on from that, midterms are basically going to overshadow everything that happens afterwards. But if you want to learn more about that, you want to learn more about the state of Clarity, you're really going to want to tune into Solana Weekly News next week on August 14th, when Rebecca Rettig will be rejoining you guys to chat over everything policy, regulation, and clarity on the SolanaFloor regulatory roundup. So be there. You don't want to miss it. You'll learn a lot. And we can push on to the next wonderful phase of this newsletter. Thomas, on Wednesday, we spoke to Plish, we spoke to Andy, and we spoke to Sin, who gave us some interesting trades, some high confidence trades, some brilliant conversations, some excellent views of the market, some people who have really been dialed in for many, many years and traded many cycles. What did you like from speaking to these guys? What was the biggest learning that you took from chatting to these trading chads?
Yeah. So I mean, first of all, I think I took all of the trades, or I didn't take Zcash, but I already had some, right? So Zcash, Jito, and Bitcoin. So I like all the trades. They were good trades. They all had a good thesis behind it. Um, I mean, Andy was a joy to talk to. He had a ton of energy. I mean, hearing his story about how he sold his truck to buy Solana at $8 was just fantastic. And I mean, I've been checking out their Thor platform as well, their automated trading strategies. So I feel like that was extremely exciting to hear about the good times when Solana was under $10. Also, I mean, Sin's breakdown of where we're at in the cycle, I felt like um, kind of cut through all of the noise that you see on the timeline and just breaks down very cleanly. Here was a bottom, here was another bottom, here's where we're at now. This is a bullish divergence.
Yeah.
So I thought that that was a very like clean thesis, and just it left me feeling pretty positive about the cryptocurrency markets. How about you?
Yeah, I'd agree. It's very illuminating to speak with these people who have traded multiple cycles and they say, look, you see the same pattern every few years. um, Markets, they don't often repeat, but they do rhyme. So we're in a very similar place to where we've been in the past. In the past, this is what happened, and if we believe in this thesis, we can expect it to happen again. It actually all ties back to the 4-year cycle, which I think is hilarious because every crypto cycle, people say that the 4-year cycle is a myth and it's not going to come true,
Yeah.
and it keeps repeating itself. It keeps proving everybody wrong. And yeah, look, the belief is still there that we're forming a bottom now. I would love for that to be the case, but no one really knows. There is no financial advice on this show.
Yeah.
I would love for us to get another kind of dip on Sol, as Andy was saying. But look, I think you have to be prepared for the eventuality that doesn't happen. But you also want to be ready in case it does. So yeah, look, I think some of the greatest advice that we've got from this show is that you want to be moving slowly when you're trying to make money, and you're moving fast when you're trying to protect money. So a
Yeah.
lot of great learning on that show. If anybody wants to improve their trading, come and check it out, and we can chat with all the best traders on Solana.
Yeah, and also, I mean, when Sin was going through the chart and having me chart it, I think I was on the weekly and the monthly of Bitcoin, and I mean, I don't look at charts that like that zoomed out ever. So I think part of what my takeaway as well is, short term trading is very hard, right? You got to
Yeah.
think more long term, and I think when you zoom out a little bit, it actually makes things a lot easier. So, DCA and chill, stake and chill. I like that mindset, but it is very interesting to talk to all the different traders and hear the different ways that they're thinking about the markets.
Yeah, precisely. We'll push on to the stat of the week. Thomas, this is something I mentioned very, very briefly earlier. Solana application revenue, after being in a bit of a downtrend, is starting to turn around. We are in about 4 months of a steady incline. I think this is only going to continue to grow. On-chain activity is at all-time highs. There's a million different updates going through. They're going to make the network remarkably better in terms of speed, in terms of efficiency, and hopefully in terms of Sol value growth as well. So look, this is a very, very encouraging chart. Application revenue up and to the right. Hoping to see some sectors that are not meme coin related to help us kind of expand a wee bit. But very, very encouraging signs there from Blockworks research.
Yeah, and I mean that's what Solana's for, right? People should be building on Solana. We should be seeing a lot more applications on Solana, and to kind of see like my favorite place to check a lot of new applications is on the Solana mobile, like the Seeker phone, just to see what people are building. And there's always a bunch of new apps to check out. So that's like one of my favorite things to do is check out like where people are having fun, what people are building, and what I come back to. So um, keep building.
Keep building. All right. And the state of Solana in a tweet, one of my favorites. This one coming from Gum this week. Gum says Solana is getting faster, will drop inflation, will burn 10 times more fees, millions per day in peak bull. All of this while it is the chain with the best distribution and product offering in crypto, and it's happening here. So he circled this little blip right towards the bottom of the chart after these massive spikes. This goes back to what we were saying earlier. Fundamentally, Solana has never looked better. Forget about the price. All the signs are pointing to another very exciting and very prolific cycle for Solana. The chain is only getting better. Thomas, would you concur with that thesis?
Yeah, 100%. I mean, that's why we're here, right? We believe in Solana, and one thing I was just thinking about is we actually need to bring somebody on to trading floor to pitch us Solana. We haven't had anyone pitch us Solana other than Simon, who came on to short Solana. Yeah, we do need somebody to come on. I mean, I know that we talk about all the fundamentals and what's going on, so it would be interesting to see some levels on that. But yeah, I mean, Solana is looking great here.
Solana is looking great here. And beyond that, there's little pockets of the Solana ecosystem and the community that are also looking great here. One of them is the Seeker community. So if you want to catch up with everything happening with the Seeker community, with Seeker Summer, and chat to some power users who are really sweating these devices to make the most out of it, tune into Shipped next week. That's going to be on Tuesday at 11 a.m. ET, where Jack will be chatting with some of the most prolific Seeker users and getting into the nitty-gritty details about how they're using their Seeker. Following that, on Wednesday, 11 a.m. ET as well, we're going to be back on the trading floor. We've got some great guests lined up as well there, so be sure to tune in and level up your trading knowledge. And then we'll be back here on Friday again next week with Rebecca Reddig for Regulatory Roundup. We'll be chatting everything on Clarity Act and all other kinds of policy-related things regarding to crypto. Thomas, anything our lovely viewers need to hear before signing off for the weekend?
No, we've got a great lineup of streams next week. We've got some great guests. I'm pumped for them. I'm very excited to be on the Shipped stream next week. I think that will be awesome. And man, I'm having a blast on trading floor. So make sure you guys tune into these streams. And if you guys have any trades, go to perp.so. Make sure to publish some trades. Put your thesis out there. We'll read them on stream and either take or pass on them. So yeah.
We will take and pass. All right, Thomas, thank you so much for joining me on this fine Friday. Let's go and see what's happening on Twitter, and let's see if all these coins have started going nuking to the ground again since we've been streaming.
Sounds good. All right. Thanks so much, man.
Cheers, Thomas. See you next week.